Usually, for the preparation of final accounts, for the trading concern is quite a bit easy. Where we are purchasing, in case of furniture showroom, they purchase the table, cupboard, whatever it may be, chair, everything, and then it is sold. It is sold, right? Purchased and sold. Buying the finished goods and selling as it is coming under trading concern. But when it comes to the manufacturing entities, they purchase the raw material. For example, they purchase the wood, steel, plastic, etc. That will be converted into table, right? That will be converted into table, chair, like. This processed item will be transferable to the next division, where it may be kept in the showroom and displayed and sold finally. So in this case, the conversion process that wood is converted into finished goods will be taken care in a separate division called workshop or factory. Any items, income or expenses, whatever it may be related to the factory will be separately recorded in a new account called manufacturing account. This is called manufacturing. Okay, manufacturing. In this manufacturing account, we spend the money for purchasing the raw material and we convert that raw material into finished goods by introducing labor cost, some other machine related cost, factory related expenses. Actually, in CMA Foundation, we have the costing paper, especially cost sheet. In that cost sheet, we call this being the factory overheads. Any cost you incur in the factory will be called as factory overhead. All these expenses will be grouped and posted in the debit side of the manufacturing account. Some of the examples are here related to this. Some of the examples. Okay. Factory expenses like rent, depreciation, salary. Sir, rent, depreciation, salary, everything will be debited only in the P&L account, sir. No. Here, anything related to the workshop will be debited only in the workshop account. The workshop account is named as manufacturing account. While preparing the cost sheet, that will be coming under factory overhead. Up to this point, we find out the cost of production. So to produce the table, what is the cost we incur? The material cost, the labor cost, and the depreciation of the machines used for manufacturing this one, salary, rent. Will the rent come here? Comes here. When if the rent is meant for the factory, then it will come here. Is that okay? All the expenses related to the factory will be posted in a separate account called manufacturing account. From there, it will be transferable to trading account. Once it is over, then it is transferable to the trading account. Okay, the finished goods will be transferred, the table and chairs. And with the additional expenses like admin and showroom, will do selling process. Okay, showroom, otherwise sales expenses. This process is coming under trading account. This process will come under P&L. So for the manufacturing company, the preparation of final accounts is now extended by one more subdivision called manufacturing account. The manufacturing account resembles like normal trading account, but it's related to the factory. All the expenses related to the factory will be debited in the manufacturing account. Usually, the source of the manufacturing account is the wages, means the wood and steel, the raw material, and then the raw material is converted into table and any other finished goods in the manufacturing division in the workshop by introducing the additional wages and any factory equipments as well as the support of the factory. And once it is over, it will be transferable to the finished goods. Means the trading account, and in trading account only the sales happens, and then we'll get the GP. That GP is transferred to the P&L account. So let's see here. Okay, let's see here the format. Okay. Now, how should the manufacturing trading account and P&L account as well as balance sheet? manufacturing, manufacturing, trading, and P&L account. Trading and P&L account. And then finally balance sheet. Okay. In manufacturing account, we introduced the raw material purchased and wages and salary. Wages and salary or salary, whatever it may be related to the factory, carriage in. All the item usually you might have studied being the debit item of the trading account will be debited in the manufacturing account. Carriage inwards, wages, power, coal, whatever it may be you might have studied, no? Could have been debited in the trading account. Instead of debiting that in the trading account, it's going to be debited only in the manufacturing account, right? Carriage in. The carriage in represents the carriage amount paid, carriage in inwards amount paid to bring the raw material to the workshop. So it's a part of the raw material cost, not the finished goods cost, up to the point of production will be debited to the manufacturing account. All the manufacturing expenses like factory rent, okay, factory rent, and electricity, power, repairs, all these things will be debited here. Now on closure, see in the factory while processing, no, some scraps may come in, right? If any scraps comes in, then that will be credited here in manufacturing account itself, right? Sale of scrap. Okay. For example, I introduced a material worth rupees 1 lakh for the manufacturing of certain commodity or certain product. After the process, we get some scraps of the material that was discarded for rupees 0.2 lakhs. So then, what is the price of the material we have used here? Only 80,000 rupees. Am I right? It is not 1 lakh. So any unused or any scrap sold, just imagine with that gold. You want to manufacture or produce any gold chain. You have given around 50 grams gold. Okay, when the chain is made ready, the chain costs us only 45 grams. Will you be happy with that? What will be your response? What happens to the another 5 grams, sir? Sir, damages. Give me the dust also. Now 5 grams, 1 gram is equal to 4,000 to 5,000 rupees. 5 grams is almost 20,000 rupees. Do you want to lose that? Any scrap is there, whatever the value realized will be subtracted from the cost of production. The chain value is now subtracted. Whatever the cost we incur for producing the chain, that value should be subtracted. What is the cost of production of the chain? Material, wages and all. Any scrap is there and any amount realized from scrap should also be subtracted from here. Is that logic? Are you able to understand? Now, this is the sale of scrap. Sale of scrap should be credited here. So I'll just write it here. Sale of scrap. Once the production is over, whatever the value you get now, that will be transferable from trading account to, this is transferable from manufacturing account to trading account. Second block is a trading account where I am transferring here. Cost of production, finished goods. Okay, we don't purchase. Usually, being the trading concern, we purchase the finished goods from outside, but I am manufacturer come trader. I manufacture the finished goods required for my business myself, not purchased from the outside. So whatever the things available in the workshop is now transferred to showroom. So the transfer will be happens from here to here, means from the manufacturing account to trading account. And you will get the sales here. And on tallying this, you will get the GP. Then thereafter, you transfer the GP to P&L account and find out the net profit. The net profit is transferable to balance sheet. Hereafter, it's normal. Only the additional point you have to note it, this one. And in trading account, we don't have purchases. Because the finished goods are transferred from the workshop to showroom directly. Now, in this case, the stocks are for 3 varieties. One is raw material stock, another one is finished goods stock, another one is halfway through, work in progress. It's not raw material as well as it's not finished goods. It's anywhere between these two will be called as work in progress. And only the finished goods component will come in the trading count. Trading count. So in trading count, opening stock of finished goods will come, and here closing stock of finished goods will come. Is that okay? This will come. And in case of raw material and work in progress, these two will come in the manufacturing count. Where? In the manufacturing count. Opening stock of raw material as well as work in progress should be here. Should be here. And closing stock of raw material and work in progress should be here. Is that clear? Hope you could understand. So these are the small points you have to understand. Semi-finished goods is otherwise named as work in progress. You are absolutely right. Semi-processed, incomplete goods, right? So you have to understand the preparation of the manufacturing account, trading account, and P&L account, and then balance sheet in case of manufacturing entity. Is that okay? Come on, make a note of it.